Gold market forecast. April 18th, 2025, another record high, but can the momentum hold? Market overview. Gold prices have surged once again, closing above the $350 Oz mark on April 17th, 2025, setting a new all-time high and solidifying its role as the top-performing major asset of the year. The precious metal has now risen over 25% year-to-date, driven by global macroeconomic instability, geopolitical unrest, and intensified safe haven demand. As the rally continues, market participants are closely watching for signs of a sustained breakout or a short-term correction after this historic climb. Key drivers behind gold's surge. U.S.-China trade tensions. Intensified geopolitical risks spiked this week as the United States announced new tariffs on high-tech imports from China, reigniting fears of a renewed trade war. In response, China signaled retaliatory measures, escalating economic uncertainty. Federal Reserve Chair Jerome Powell noted that prolonged trade conflicts could dampen U.S. growth and raise inflation risks, an environment historically bullish for gold. Source: Markets Insider 2. Weakening U.S. dollar. The U.S. dollar index has dropped to its lowest level in over 3 years, declining by 1.2% this week alone. As the dollar weakens, gold becomes more attractive to international buyers seeking stability. Major currencies like the euro and British pound have strengthened in comparison, further boosting gold's appeal in non-dollar markets. Source: Investopedia 3. Aggressive central bank buying. Central banks, especially in emerging markets, are increasing gold allocations as part of a global de-dollarization movement. Notably, China's central bank now holds 8% of its reserves in gold, having imported over 700 tons from the UK in the past 2 years. This trend reflects a shift from traditional U.S. treasuries toward tangible assets. Source: Reuters. Technical analysis. Gold remains in a robust technical uptrend, trading well above its 50-day and 200-day moving averages. The Relative Strength Index, RSI, hovers near 70, indicating potential overbought conditions. Meanwhile, MACD indicators are beginning to diverge, hinting at a possible short-term pullback. Key support levels: $3,200, $3,155, $3,120. Key resistance levels: 3,330, 3,366, 3,400. While long-term momentum is bullish, the market may soon enter a period of consolidation or correction, especially if profit-taking accelerates. Price forecast for April 18, 2025. According to Coin Codex, gold is expected to fluctuate between 3,165 and 3,389 OZ on April 18th, with a projected average price around 3,307 OZs. Source: Coin Codex. Forecast. Leading financial institutions have updated their 2025 projections. Goldman Sachs now forecasts $3,700 OZ. UBS estimates $3,500 Oz in the medium term. Both cite sustained demand, global de-dollarization, and geopolitical risks as primary factors. Sources: MarketsInsiderInvesting.com. Conclusion. Gold continues to act as a global barometer of economic anxiety. With geopolitical risk, central bank demand, and dollar weakness all fueling bullish sentiment, the rally has strong legs. However, technical indicators are signaling possible short-term exhaustion. Investors should remain cautious and consider both fundamental and technical factors before increasing exposure. As the market approaches the $3,400 level, the key question becomes, is gold still undervalued, or are we nearing a correction point? Stay tuned. The next few days will be critical.